So, you want to make some ISK? Well, I've got just the thing for you. I'm going to run you through the foundations of trade, including the types of trading, day trading, position trading, scalping, swing trading, and region trading, the factors to consider when you are trading, things like market size and volatility, region trade volume, and sinks and faucets. I'm also going to run you through the mitigating elements in trade, things which by their nature will impact your overall profitability and rate of return. Basically things that cost you money or will make you money, such as your terms of trade, rate of exchange, your competition, taxation and escrow, and CCP development. Also, your trade skills will come into play. Let's get into that first. So the trade skills, they're pretty straightforward. You start off being able to create 5 simultaneous orders. Your order skills will impact that. Trade, as trained, gives you 4 additional orders that you can put up in the market per level. Training retail gives you 8 additional orders per level. Wholesale doubles that number again at 16 orders per level. And Tycoon raises it to 32 additional orders per level. With all of these skills trained to their max, you get over 300 simultaneous orders that you can keep on the market simultaneously. I won't get into contracting for this because it's a bit of a departure from where I want to go with this video. Needless to say, there are contracting specific skills that allow you to increase the number of contracts you can put up, as well as the number of corporate and alliance contracts that you can create. In addition to the order skills, you will only be able to trade in the system that you're in initially. In order to increase this radius, you need to train your remote order skills. There are 4 remote order skills, and I'll start with marketing. At level 0, you're limited to trading in your current station. At level 1, you can train anywhere or trade anywhere in your current system. At level 2, it's up to 5 jumps away, 10 jumps away at 3, 20 jumps at level 4, and at level 5 you can trade anywhere in the same region. You cannot purchase or sell across region borders. So if you are in Jeddah, you cannot initiate new buy orders in another region, such as Oman. The ranges for these skills are the same as for marketing. Procurement, the ability to set up buy orders from farther away. Day trading, the ability to change buy and sell orders at a further distance than what you would start with. And visibility, which impacts your individual orders themselves. This makes each buy order visible from farther away. Each buy order can have its own effective range limited to this skill. So if your skill is trained to level 5 and you put an order in Oris, or the Amar primary station, everyone in domain can see the buy order and can sell to it. So why get into trading? Trading's got some serious advantages. First, it's easy to get started. It's easy to do during war or when you're very busy with your corporation. It's time flexible. It's scalable. It doesn't cost a lot to get into, and you can grow it fairly easily. Trading also has some drawbacks, the first of those being that it requires a lot of patience, perception, and a healthy tolerance for personal risk. You're putting your own personal money on the line here, and any trades that you do incur the risk of potentially falling on the market. If you fall, you're going to lose money. You'll end up having to sell something at less than what you paid for it. Taking a loss like that can be recuperated fairly easily with a couple of good trades, but the problem is you do face that trade-off. And it requires you to do some learning. In addition to the above skills, there are some things that you're going to want to read up on, and you're going to want to spend a lot of time in the market looking at recent price trends and where things have shifted. So why do it? Well, Plex, really, money. The ability to pay for your game time, or simply afford all the things that you want. The more money you make and the better you get at trading, the more money you can make in return. Buckets and buckets of it. So how do you get started? Well, first you need something to trade. Common first-rate commodities are ammunition and charges, planetary commodities, ore and minerals, modules and hulls, exploration loot, and things like skill injectors for those who've got a little bit more money to start with. Your objectives should be to make a profit, to make enough of a profit to do it again, to accrue surplus to trade in volume. The more that you can sell in volume, the more money you can necessarily make. And to see how and where you can grow. How can you change what you're doing to increase your income? Diversifying your trading portfolio sounds like one of those fancy things you'd hear in a movie, probably starring Nick Nolte or Robert De Niro, but really what it comes down to is buy and sell more types of things so that if one thing goes flat, all your money is in one basket. And build efficiencies. Find ways to reduce the amount of time you spend doing administration in order to make your money make sense. The types of trade. To begin with, there's day trading, which is basically just trade during the hours you're active. If you're a filthy casual, this is going to be the primary mode of making money for you when you get into trading. Basically, you're going to get on and trade in fast-moving items with small margins. Think about being a grocery store. They don't make a lot of money on lettuce, but they sell a heck of a lot of lettuce. Profits earned on volume. Because you're able to sell in such high numbers, you're able to make a significant earning on that small amount of margin because you're selling 2, 3, 400,000 of that thing. A candy bar might only have 50 cents profit in it, but if you sell 1 million of them, you still make a lot of money. And the immediate advantage of that is, of course, immediate gain. The faster you sell what you've traded, the faster you offload it, the quicker you make your money. If you can turn around a good trade in a couple of hours, or even a couple of minutes, you can make enough money to make it worthwhile. It also comes with the advantage of low overhead. You're typically only trading in the course of a single day, and you're not typically holding on to stock. It also is fairly simple. Get in, buy, find somebody to sell it to at a higher price, get out. Recommended trade items are ammunition and charges. Why? Because PvP is the raison d'etre of EVE, and that is your primary thing you're going to be doing, is trying to find people who are going to use consumables. Sell to them first. They will come back time and time again. Position trading is a lot like day trading, but you're holding onto the stock for longer. Position traders hold their position for weeks, months, or years in the real world, and EVE it's more like weeks. This is also called longitudinal trading or Forex trading. Forex trading stands for foreign exchange, and typically what it means is that you're buying a large volume of something and sitting on it until the price goes up so that you can make a big return. This type of trading is typical speculative investment, which means that you're buying something in the anticipation that the price is going to go up, either because you think you know something about where it's going, or because you anticipate a change due to something coming down the road. Whether it be an impending war, or a change in price, or an increase in the manufacture of a certain type of ship. Regardless, you see an upwards trend and you're going to sit on it until it makes the most possible money. The idea of this is, of course, to ride out any of the volatility that happens on day-to-day trading. You'll start probably by trading planetary commodities or high-demand minerals, things that will appreciate over the course of the week or over a certain number of days, or also fuel and ice byproducts. These are things that are always in demand and routinely shift in price over a week-by-week basis. Then there's scalping. Taking advantage of market instabilities to get the maximum possible price the market will bear. If you've looked at the prices of the Nintendo Classic, you know exactly what scalping is. $60 at sale, scalped for $900 on Craigslist. This sort of trading obviously depends upon a certain amount of change from CCP Development and wars happening in game. When CCP Dev steps in and introduces changes, nerfs, and buffs, things will happen to the game that cause players and industrialists and corporations to get their feet into the war machine and start making stuff. Some things devalue in price, other things exponentially grow, they skyrocket. Wars can have the same effect. When Test Alliance and Goon Swarm, or Circle of Test, go to war with one another, or if NCDOT decides to brawl it up with somebody in Cloud Ring, what you end up with is a region of space where there is a higher demand for certain things. Materials to make ships, components for modules, and so on. The cost of those go up as supply dwindles. Scalping relies on the idea that you know that there's going to be a change. You buy at the lowest price, and then you sell as soon as that price peaks. And you mark it up. The idea being that you have the ability and the ISK to buy at max stock so that when the end of the day comes, you're the only guy left holding on to any, and you can sell it for whatever you want. This also depends frequently on having access to major markets. If you don't have anybody to sell it to who can afford to pay your prices, you might have priced yourself into a corner. You also need balls of pure titanium, because this is the kind of game where if a bigger player who has that stock available catches wind, he can smite you out of spite. He'll just come in and roll over you and sell at half the price. Recommended trade items: ship hulls, modules, and components. Other good ones are things like excavator drones. These things frequently go up in price when nobody has anything around. Then there's swing trading. Swing trading attempts to capture gains in a stock within an overnight hold to several weeks. And similar to position trading, but playing within the middle ground, you're attempting to catch the most value from each and every individual dip and peak in the price of something that you're trading. You're paying attention to market fluctuation. You buy and hold stock which is appreciating rapidly in value, so you're looking for things with very strong peaks and dips. And you want to dump everything at as high a value as you can each and every time it peaks. Typically traded items in this way is anything which is moving. In this case, I'm looking at the example of a gecko. A position trader would buy when it's 20 million at the 3rd of August and maybe hold out for the whole year, watching that price go up. You know, if a smart position trader were to do this, holding for a whole year on a stack of geckos, you can see here that he's going to make a 4 times return on every single module he has, going from 20 million to 80 million ISK in value. Comparatively, if you were to sit on this and sell once every 2 or 3 months as it peaks out, and then buy again when the price comes down a little bit, and then sell at the next peak, you can potentially make even more money by moving smaller volumes of the same thing at peak price times, enabling yourself to buy more of that thing to trade at a higher price again later. You're basically taking a little bit of an extra edge rather than letting the whole difference even out over time. Then there's regional trading. Buy low here, sell high somewhere else. It's that simple. It does rely on your ability to be able to buy and move in volume anything that can sell somewhere else. That's it. Anything which can be moved can be sold by region trading. And if anything which is currently in demand. If it's not in demand, it's not worth moving. So, for example, if you go to JITA and you see that there's a dearth of a particular type of good, and that same good is available in a MAR at a reasonable price, then you can buy that at a reasonable price in a MAR, ship it to JITA, jack the price up to something which is not enough to drive people to a MAR to buy it, and sell it at that price, and you'll make a return. It doesn't have to be matched to the price of nearby markets. It just has to be cheap enough that it saves them the trouble of going to get it themselves. Then there's the factors of trade, things that'll impact your success. things which you need to consider to make yourself effective, like market size. Normal market size is a classification for determining how many outstanding shares can be traded at a total quoted price. This means if you have 5,000 bits and bobs, what is the maximum price you can sell those for, and are there enough buyers to move it? How much of what you've got can you sell, and how much can you buy in return, whether of a commensurate product or something that you can take and trade somewhere else? The fast and dirty rules of market size are: no market is too small. In even the smallest markets, there is always something which can be traded. It often means, however, that you'll have to bring something to the market that they need, and you'll end up buying what's available to trade somewhere else. Know your customers. When you're dealing in smaller markets or medium markets, it pays in huge dividends to know who it is you're selling to. For example, if you're in a small area of Catch or Delve or Wicked Creek, and your corporations nearby which are buying from you and selling to you are heavily involved in ratting or in ice mining, you have immediately things that you can take to market to sell, and you can, through questions and communications with them, identify what they need in return and bring it back to them. By playing in the right markets and knowing what to sell and what you can buy in order to get a return by taking that to market for them, you create a market, which is the third rule. Sell whatever works, be a market maker. Now, in economics in the real world, market makers have a unique place. It's an actual term for agents who hold positions in the major stock markets, and what they do is they buy and hold stocks and securities which find themselves in a position where either they are cooling or not selling as well, and those market makers will facilitate the agency of trade in those markets to keep currency flowing, to keep the market turning. So they'll buy less desirable stocks and then resell them at a very small markup to people who later materialize to buy that. So they're basically just rotating stock. And what happens in small markets is that you essentially become like the anecdote of the young boy whose dad gives him a little cup full of paper clips. You know, maybe his dad bought too many while he was at Staples. Well, kid says, I can't eat these, I can't trade them, I'm not going to get, baseball cards out of these. How do I get something out of these that I can use? So he goes to the neighbor and says, hey, neighbor, mister, do you need these paper clips? And he goes, well, yeah, actually, I'm working on some reports. I could use some extra paper clips, and I was just going to go to the store to get some. Tell you what, I'll trade you my old basketball for those paper clips. And then the kid goes, well, I've got a basketball, but okay. And he trades. And then he takes the basketball and he trades that to somebody else for something bigger. And he goes around and around until he gets the product he wants. Be a market maker. Take advantage of every opportunity and use each and every additional trade to make yourself more money. If your local people are pirates, trade to the pirates. If Spectre Fleet and Bombers Bar are nearby, make sure you've got torpedoes and bombs stocked. Anything which will make you bank. Another thing to consider with market size is understanding the size of the capsular corporations in the area. The more capsular corporations there are and the bigger they are, the better your earning potentials can be. Also, all of HiSec has positive area for market development. Some of the deeper backwaters of nullsec may not be because they are sparsely populated, so necessarily your buying pool will be a little bit smaller. Ask yourself these three questions when considering a new market in which to trade. How many corporations are in the area and how active are they? How many active free ports operate in the area and how busy are they? And what have the recent regional economic reports shown? Yes, you should be paying attention to these. Market volatility is understanding how various goods, securities, and commodities on the market reflect against indicators over times. The more extreme those changes are over a short period of time, the greater the volatility is. the price and pace of marker goods determine the overall volatility. And a marker good is something like titanium, which has a generally flat holding price that you can look at. Other things that shift in price faster than it are considered to be volatile compared to titanium. Titanium in that way is the beta marker. Anything else with shifts around it gets a beta score. That volatility is the beta. So here's an example, talking about titanium. You've got titanium, which is held pretty steady between 3 and 5 ISK per unit for quite some time. It's pretty flat, supplies are solid, there's lots of units available. We're sitting well over 1 billion units in circulation most of the time right now. It's a pretty steady bet, and you can position trade on things like titanium, buying in very large volumes and sitting on it when it, you get it at a price where it's like a 4.2 or 4.3, and then you're selling it at like a 4.7, maybe a 5. That's where you're going to make your money as a position trader on something that's got a very slender margin like this. But if you're looking at titanium as a marker, titanium is pretty flat in terms of its pricing over time. It holds pretty steady. Its moving average is very flat. If you're going to compare against it, you can also look at another flat indicator like medium shield extender 2s. It has possibly even a flatter sell value. It hasn't shifted up or below more than 20,000 ISK per unit in the last several months. Supplies are ample. There's really no reason for the price to go up unless supplies start to dwindle. So this is a good beta marker to look at. Compare by comparison with Caldari Navy Scourge Light missiles. These things peak and fall constantly as demand and supply shift. The lower the supply, the greater the demand. The highest peak on this chart sets the price up above 1500 ISK per at the time when the supply was nearly lowest. At other times, the supply on the market has peaked out and the price has crashed to below 600 ISK per unit. That's less than half of the value at the peak. So this would be considered a very volatile stock by comparison to titanium or medium shield extender 2. And obviously Plex is probably the most volatile stock that I can think of off the top of my head. It is a commodity which holds as a really, really good trade value. It trades very highly. It accrues in value very, very quickly, and it can shift up and down in the course of a day. With the upcoming changes to Plex, you can anticipate that this is only going to continue. The thing with Plex, though, is that it is expensive to get into, and it is really good to trade when you're at a higher level and you can afford things in the range of 1 billion ISK per. Then there's region trading volume. Total volume of trade reflects the entire value of all the trade carried out in a region. Basically, how much is going on a month-to-month look? Well, if we look at the economic reports from December, we can see that the Forge, JITA, did as much business as all of the other regions in space combined. 455,000 billion ISK worth of trade conducted in December. By comparison, come February, that volume had fallen to 421,000 billion ISK. Domain had fallen from 72,000 to 63,000 billion ISK. Now, those are some pretty big numbers to look at, and when you're looking at a month by month monthly report like this, you can get a little lost in the numbers very easily. It's easy to look at this and kind of glaze over and not understand what the numbers mean. So I'm going to use a real example here, and you always please pay close attention to the monthly economic reports generated by CCP Quant. Because things like cloud ring's shift in business are a dead giveaway for markets with new activity. In December, Cloud Ring did $58 billion in total business. Come February, it had done almost $400 billion ISK in business. Now, yes, you could say that it's possible that during the period of February, the 28 days of that month, maybe 4 Titans changed hand in that month, in that region of space. But is that as likely as a new Freeport opening up and a whole lot more business happening in that area? It's, up in the air. What you should do when you see something like this is get yourself in an interceptor, get over there, and start investigating. Start finding out what's on the local market. You can use the structure browser to find out which structures are Freeported, visit them, and find out how the markets are developing. Then take advantage. Then you have to understand sinks and faucets. Sinks are things which consume money, loyalty points, things which cost you. They're sunk costs in the process of playing, even doing business in this market. Faucets are things which necessarily inject money into the economy. Here you can see over the last year, bounty payments have skyrocketed. They were high before, sitting at a resting point of about $1 trillion ISK for 2 years, and since January, or actually March of 2016, in the last year, that value has climbed almost by double, up above 2.2 trillion ISK. Looking at the sinks and faucets and their performance on a month-by-month basis can inform where you should be spending money and where you should be dumping. Mitigating elements in trade. The terms of trade are basically just a measure of how effective you are at trading. Terms of trade measure the total value of exports divided by the total imports times 100. It's a percentile value. As such, terms with a ratio of greater than 100% return a profit, which can be used to increase imports or accrue capital. Basically, if you're taking in more money than you're spending, you're going to have money build up. Your war chest will get bigger. Changes in exchange or commodities can negatively impact your terms of trade. If things get more expensive for you, your terms of trade will narrow. In my example, Jury's Doctor, let's say that in 1 month I primarily purchase skill extractors. Maybe I'm skill farming. And in that same month, I'm selling Titans. Maybe I've got a couple spare expensive Titans sitting around. Well, if I've sold 500 billion ISK in Titans, but I've spent 450 billion ISK on skill extractors, exports divided by imports times 100, I have a 111% terms of trade. It means that I'm accruing capital. Money is coming in the door and not going back out. So I can take that money and I can spend that to buy more skill extractors, potentially increasing my next month's profits, or I can let that capital build up. I can let it accrue. However, if the cost of skill extractors go up, and they go up over my export value of 500 billion ISK, then my terms of trade will dip into the negative, which means that I've had to start spending capital out of pocket. Plex, as a major injector of ISK into the market, interestingly enough, not mapped on CCP Quant's chart for sinks and faucets. Plex prices fluctuating can impact the price of almost any of these other items, and sales in the new Eden store also directly impact the prices of skill extractors. So keep in mind that the costs of these items may rise or fall, impacting your terms of trade. Then there's the rate of exchange. Rate of exchange is basically how much are you able to buy of one currency when selling another. In EVE Online, there is only one currency. Sorry, CCP Seagull. ISK is all that matters. Technically speaking, anyways. See, Plex is not a currency. Sure, you can set up contracts where you sell a Titan and in return you get 14 Plex or 20 Plex, but that's contracting, where you're exchanging items for items. Plex is not a currency. You could just as easily substitute a different type of expensive item for Plex, or a different quantity of item for Plex in the contracting scenario. You don't buy shipskins with Plex. You turn Plex into Aurum, and you buy shipskins with Aurum. You buy character customizations with Aurum. And if those items have been purchased with Aurum by a character or by a toon, another player, and put on the market, you can buy those things with ISK. But the only way you ever buy items on the market is with ISK. There is really only one currency which matters. Yes, you can have a rate of exchange from ISK to Plex, but really that's only effective in two ways. One, stockpiling funds, buying Plex and holding on to them as a way of banking your ISK. Or two, buying game time, which really is just another sunk cost. Plex is not a currency. Plex is like gold. It's just a way of establishing a benchmark value for a lot of money. You can turn it back into money, but you don't go out and buy a Rolex with a gold bullion block. Plex trades at an average value of 1.1 to 1.4 billion ISK. This price goes up and goes down on the daily. Competition is also a major factor that you need to consider when engaging in trade. Nothing is quite so bloody, ruthless, or outright vindictive as market PvP. If you're PvPing and you lose your ship, somebody places a bounty on you and then they spend the next couple of days hunting you and your buddy, you might lose a couple of ships. Hell, you might lose a few billion worth of ships. But if somebody bigger than you in trade gets on to understanding what your game is and begins to study you and learns how you make money, and they have the capital to outbid you, outbuy you, and outshop you in every market you operate in, forget a couple of billion, they'll cost you your entire wallet. Developing strong market direction for your trade ultimately means one of two things. One, you have the advantage of an exploited niche or trade. You have something, a niche of trade that you can go into, and you can say, I trade this thing in these regions, and really nobody else wants to do it, so I'm that guy. I'm the one who has that product. Or, you're the only show in town. Being the owner of a free market in a back corner of nullsec somewhere, that'll put you in the position of being the only guy in town. If it's not worthwhile for somebody else to put up a competing market next to you, they're just going to come to you to shop. You can be the only show in town. Other people might trade through your free market, but you make the money off of that, and you make money on anything you trade in your market. So, do you own the show, or do you own a part of the show? Then someone larger moves in. So, let's say Mr. Gooniebags comes in with his big dollars and decides that, hey, you know what, yeah, sure, you're selling these aforementioned Scourge missiles at 1,500 each, but I'm going to come in and sell them for 300 because fuck you. That's how it works. He can afford to do that because he can afford to build them and buy them faster than you can, and he can flood the market with them. So that thing that was previously lining your pockets is now just a lead weight sitting in your hold. So how do you piss him off? Well, you play with another big guy. You bring somebody in to compete against him. But the more competition there is in a market, the narrower your chances to make money are, unless you get creative or you find the spaces between the dinosaur's toes. Where is he not stepping? What does he not want to deal in? And where can you make money? Then there's taxation and escrow. Sure, we can move that for you, but it'll cost you. Bottom line is overhead. The cost of doing business, paying the rent. No matter how you look at it, you pay a premium to your corporation, your alliance, local security, and the market for the pleasure of doing business with others. These come as taxes and market escrow fees. Escrow is a legal concept in which a financial instrument or asset is held by a third party on behalf of two other parties that are in the process of completing a transaction. An easy way to explain this is let's say you want to buy a basketball of a friend. He's got a really nice Jordan basketball, one of the old ones with the big, print on it, or Shaquille O'Neal with the big handprint. And it's nice, you want it, you don't want to go to the store, it's going to save you a trip to go to the store to buy a new one. So you're like, cool, I'll give you $10 for it. He says, yeah, I'm not home yet. Give the $10 to my brother, he'll hold on to the money until I get there, and he'll give you the ball tomorrow. That's escrow. A third party is holding on to the money until the transaction is completed, at which point the seller gets paid. In Eve, if you place an order on something worth 100 million ISK, then 100% of those funds are debited from your account, whether or not you've taken possession of the goods yet. Through skills, it's possible to reduce that amount that's held. So let's talk about overhead reduction skills. Sure, maybe I can get you a deal. That's often what it sounds like. Reducing your overhead costs are the key to maximizing your profit margin. The less money you have going out the door doing business, the more money you keep. The accounting skill reduces the sales tax by 10% per level paid to NPC markets. Broker relations reduces the broker fee collected by NPC markets by 0.1% per level, bringing it down from 3% to 2.5% at level 5. Standings also affect your NPC taxation. The effect of lowering your NPC taxation through higher standings means that you save more money. If you can rack your standings up and have a positive standing with the markets you're dealing with, or at least not lose standing, you're gonna save money. And then there's the margin trading skill. This is by far one of the best ways to save money and leverage your money when you're dealing in a high number of orders. This skill decreases the amount of escrow required to buy orders by 25% per level. Meaning, up front, it might cost you 100% without this skill. But as you train it above level 0, your cost to buy something in escrow goes down. So instead of 100% of that value coming to your pocket right away, only 75% comes out at level 1, 56.25 at level 2, 42 at level 3, 31 at level 4, and finally you end up paying less than a quarter at level 5. So that 100 million ISK module, PithX model module that you're going to buy, rather than costing you 100 million X, is going to cost you 230,730,000 ISK. Or whatever. You know what I mean. Something to consider too is CCP's development. Yep, there goes the neighborhood. The largest market shifts in EVE have always come from the changes in development. Changes in the Rorqual almost crashed the markets. Prior changes in the cost of battleships made some players ISK trillionaires overnight. Excavator drones and Plex changes continued to swing portions in the market dramatically. The market investor reads the dev blogs. All of them. Always read the dev blogs. And in fact, on top of this, you should, if you aren't already, subscribe to the Eve Prosper podcast. These guys do a great job of covering the week-by-week and month-by-month trade that happens in Eve, how prices on various commodities and things are changing, where the good bets are to be found, what you should consider when getting into trade for the first time. All of this is covered by them in much greater detail than I cover here, and you should definitely listen in. Plus, they're a hoot to listen to. They're very, very good at what they do. They're very entertaining, and I would definitely listen. Tune in to Eve Prosper. Also, tune into Twitter. Why? Because, well, there's a few CCP devs who are known for their vague tweets, and those vague tweets sometimes pan out into actionable market data. Sometimes, though, they're just vague tweets. Thank you everyone for joining me. I am Jury's Doctor. Please like, share, and subscribe. And if you enjoyed this video, please recommend me to a friend. Cheers, and have a good evening.